Hello everyone, welcome back to another session organized by the BISP solution on the Oracle Tax Reporting Cloud Service, that is your TRCS. In the previous session, we explored the basis of TRCS application and the structure and some important features. Today in this session, we are going to go deeper into the application management part. Specifically, we will learn about that what is managing application, especially how to load metadata, working with the dimensions and editing dimension using Simplified Dimension Editor. By the end of today's session, you will have a strong understanding of how dimensions work in TRCS and how you can manage them efficiently. So let's get started. So today the topic is managing the application and working with the data. So starting with that, what is dimension? Before going into the loading of metadata and different things, our major objective here is the basic objective is to know that what is dimension, how it works. So in Oracle TRCS service, a dimension is like a category or a label that helps to organize or store financial tax data. You can think it as a way of answering different questions about a number. For example, if you see that there is tax expense which is 100 rupees, so by itself it means very little, that it can be of anything. That 100 rupees tax can be of anything. If a company is actually working in 3 different areas, that can be US, UK, or any other area like China, India. So there is not much information to get the actually just at what is the tax expense of. But if you add dimensions to it, we can say that the entity here is India, and the period can be any period that you can take, that is we can take that the March, the ending period of 2025. Scenario can be actual, currency can be INR, and then the number becomes a meaningful and complete, because it's telling that in which country it is operating, or which period it is, what is the scenario, and what is the currency itself. Each dimension represents a different perspective of data. Like who, here who is the entity we are talking about, what is the account, and when is the period, year, and view. As period and year are the same thing, and view is also according to it. Period consists of P1 to P12, which is actually under year, and year is the view, which can be actually actual, plan, or forecast. Where means what is the jurisdiction and what is the company it is operating in. Then how is the consolidation and the data source with movement, that how the data is coming. Under that, in one sheet, what is the movement means how it is coming into it, and then there is that under which assumption, that is the scenario and multi-cap. So the major question here is that why do we need these much complex thing, or these actually kinds of dimension. So without dimensions, reporting would just be a flat number without context. Dimension provides structure, consistency, analysis power, and automation. Here the structures we are referring to is that it creates a framework to capture every piece of tax and financial information. Means there under this dashboard you can see that the current provision is different, TAR automation is different, RTA is on another place, and each one has their specific form. So it actually ensures the structure of the actually application. Consistency is what we are saying here, is that the standard categories ensure that all entities and regions reports are in same way. No differences if according to the client. Then analysis power is dimensions allow slicing and dicing data, that means tax expenses by year, country, or scenarios. Here the automation is referring to the dimension controlling the rules like consolidation, translation, and elimination. Like if you don't want any data, that you can remove it. If you partially wanted, you can partially add it. It can be either 50%, 100%, or according to any other logics. Logics is one of the consolidation part that we're going to study in further classes. So coming to the next one is that instead of these 13 pre-defined dimensions, you can also create custom dimensions. like you need something else, but according to you it isn't there, according to the client it isn't there. So TRCS allows adding custom dimensions. Example, if you want to track a industry type, you can have a manufacturing and manufacturing by banking and IT column, that you can dimension that you can add. You can also add a custom dimensions according to your own needs rather than these examples. For example, in FCCS you can add product that you need anything. So let's start with that. What are the predefined dimensions? So predefined dimensions are that which are already provided by the application itself when we make it. These are already seeded in the place which is already provided by the application which we work on. We just have to feed data itself and it will adjust it accordingly. So here our first one is accounts. So here account represent the chart of accounts extended with the tax specific account like DTA, DTL, tax credit. It is the backbone of our application. So we will just switch it out to the application. Here's the application. You can access it either in two ways. So first we will actually duplicate the tab so that we can easily access from both the places. So here we have actually duplicated the tab. So first we can go through the navigation, then under the create and manage there are dimensions right here. This is the first option that you can go and edit or even see any of the dimension if you like to. The second option right here is going through application and then under overview. Here in overview you can see different cubes, dimension, configuration and consolidation. Dimensions. So here are the all the dimensions. You can see here account, configuration, consolidation, currency, data source. And then you can see here also in under the dimensions, account, configuration, consolidation, currency, data source, entity from currency, the same that are actually here is also here. You can either go from nav to dimensions. Nav here stands for navigation, then under the create and manage you can go to dimensions, or under the application you can go to overview, and here you can see, and on the third point after cubes here we have dimensions. So here under accounts you can see there are different accounts like income statement, balance sheet, all the data related to different accounts with numeric terms are right here. So let's start with what is the purpose of it. So here its purpose is to classify what kind of financial value or tax value is being recorded, to control the behavior. Behavior here means that the balance or the flow, currency handling, tax rate and etc. to support the tax specific calculation under different packages. Here the different packages that we are referring to is that the ETR, provision for tax, temporary difference. The accounts are organized here in hierarchy that are parent, roll up, children. Here is example of it. So you can see here that under 80,000 you have this is actually the parent right here, and this is a child. 80,000 is a child. FCCS income statement is parent and 80,000 is a child. So when you actually drill it down, you can see it base PTBI and 80,000. Then 80,000 becomes the parent and this becomes the ancestor. Under 80,000 you have 79,000 and 79,100 79,001. So these are its children. You can even call them siblings, and these all actually roll up. These both values roll up to 80,000. Under the 79,000 you have all the different values, and this became the children, this became the 79,000 became the parent, 78,000 became the children, 80,000 became the ancestor. It is like a tree. I can okay, so here you can take it like it's like a tree. This is the point of origin. You can say that this is the point of origin. This is the ancestor that we are talking about. Then this gives birth to two children. These two children are siblings of each other. Then these two actually children give birth to new accounts that they will become the parent. Now these will become, then the children will become the parents, and the main parent will become the ancestor right here. It's basically like a hierarchy chart that you can see that it gives birth to one option. So here you can see it under these thing 78,000 we have 40,000 and 50,000. Under 40,000 we have 41,000 different things. These all are from 41,000 till 49,902. These all are actually it's the children of 40,000, and they all are the sibling of each other. You can create this. I will tell you later that how to create a sibling and how to configure the dimension itself. So let's move forward. Here the each account has a property, meaning the trial balance has actually we always take the trial balance close. Here the time balance is balance or flow. The account types are like asset, liability or expense, including revenue itself. Data type is currency, percentage. Exchange rate are like average and ending. Intercompany is yes or no. So now moving on to the second part, that is our period. But before that, I will tell you the example. Let's take example that there is a current tax expense that we are talking about. So it's a flow account. It's a flow account because its balance is flowing to the next year or actually next month. As we have to actually deduct the tax, and we have to find the remaining things like the DTA or anything else we have to find out, and its type is expense. Same is with deferred tax. That is under deferred tax we can take NOLs. That is the balance account, and its type is asset. We just have to the basic thing that we have to just keep in mind that here you can see that I have given the tag, children's tag, like revenue 1, revenue 2, revenue 3, revenue 4. Here the aliases of the actually the names cannot be same. Imagine if 40,000 is a parent and then there are children 41,000 till 44,000. From 41 to 44,000 the children can't have the same name. They have to be given unique names. Now if we come to the period itself, so here's the period. Okay, total we have here like from P1 to P14 nothing, we don't have anything, as these are all the seeded periods. We can't add anything, but you can if you feel the need. So here the period is represent a time bucket inside a year that can be from January to December or April to March. It can also mean that it can be from Q1 to Q4, half yearly or monthly. So the purpose here is to enable that the monthly and the quarterly close to roll up in a to roll the amount in quarterly, annually or half yearly, or it allow us to calculate the interim provision. It creates the app and set up a fiscal calendar year for us, which help us in identifying the data in different time period in different zones like quarterly. Then the Q1, Q2, Q3, Q4, that is a 3-month period that we are talking about. Then we have monthly, that is per month. Then we have half yearly, that is 6 months. So Here we have to just actually remember that while confirming the fiscal period while making the application, as you can't go or roll back in the time and add, if for example we have taken 2015, so we will add 2014 as a prior area, but we can't take 2013 or 2012. We can just extend it further in future. You can't alter time structure in the mid-year. Next we have here is consolidation. So consolidation is a technical dimension that tracks consolidation stages, like what is the data we have input, any data that we have eliminated, or the elimination of entire actually you can say entity, or the consolidation. It can be through business rule or any other thing, like while applying the logics that we are going to study here, we run a force consolidation via business rules, so that it actually implement to all the implement to the specific time period or the specific view scenario that we were working on. So here its purpose is to handle the multi-entity consolidation and eliminations. To provide auditability, you can see a result at each stages. Each number passes through a different stages. For example, entity input, then to the ownership proportion, then to the elimination, then to the contribution, then to the consolidation. This is the process that we are going to learn in the consolidation session. So I'm going to discuss it in actually depth, so that you will understand it, that what is the meaning of each input, ownership, proportion, and what is its working. You can even drill it down to see the pre or post elimination under it. So we can come to our next one, that is our data source. So here data source is actually that thing, you can say that that's a source information, that where it come from, that where is it deriving, or where it is actually coming from. The information, like that where are the number coming from, under from which section, is it from ERP, is it from the Excel sheet, or it is from the ad hoc. So to differentiate the between the ERP managed data, manual input, and system calculation, this is the dimension which tell us that from which it is actually adjusted, and it also helps us in maintaining the audit trail itself. The common member under R is that managed data, that is the ERP actual, data input, which is the manual entry, tax automation, that is the system calculation, and here we have adjustment, that is the top side correction. There are also different things, like we can run it for current tax payable, that where it is the data is coming from, current tax payable, right here. Then we can take example for like ERP posts, like from ERP we have taken actually data which is book income, so it will come under the managed data. From tax analyst, it has actually inputted some data, so it will come in data input. When we are calculating the deferred tax, it is from the automation, as it is automatically calculated by the system itself. So you can actually refer these examples to understand that the common members. Adjustment is what the tax analysts do it on their own side, so that can also be said as that a tax analysis can be. Next we have currency, that holds value in multiple currency, that can be that local plus in reporting. For example, that there is a company, Indian company, which is operating in US, so all the revenue that it has earned in the dollars will be converted to Indian rupee while actually reporting it to the regulatory here. So to translate, it helps him to translate the local books into reporting currency, you can say that, or to calculate the FX difference for the tax disclosure. Here the FX we are referring to is the foreign exchange rate. So it works in a way that the entity has a base currency property like INR, and the translation rules apply. for example like balance sheet accounts to end rate and P&L account to average rate. User can switch between the local currency, USD or any other currency in the reports. Indian current tax expenses translated to USD, or the USD tax expenses converted to INR, that we're talking here about. So here we have different currency too, and we can select no currency if it is not under any if that is the base currency that we have taken, or the entity currency which the entity is using right here. Then here next we have is intercompany. So intercompany is refers to the dimension to capture counterparty entity for intercompany transaction. We have a very little usage in TRCS of this. This is majorly used in FCCS. So in major areas we take that FCCS no intercompany. But to actually explain you, I will give you a proper demonstration that its purpose is to enable the elimination of internal transaction. That for example, that if there is a transaction between a company A and B which is under a D company, it's a subsidiary of D company, so it actually eliminates the internal transaction between them to ensure the accuracy of consolidated tax data. Every entity is mirrored here as an ICP member. Alright, so here the intercompany account must tag counterparties. Next we will come to our is entity. So here the entity represents the organizational structure. Here the structure is referring to the subsidiaries, branches or the legal units. You can let me just give you an example right here from the dashboard itself. Under the FCCS total geography, we have North America, South America, corporate, EMEA, APAC. Then if we drill it down furthermore, then we have North America, LE101. So these are the entities under specific regions or geographical regions that you can say. And its major purpose here is to define the ownership, consolidation methods and base currency with reference to jurisdiction. It provides us the reporting of roll-ups from like regional to global. Imagine that there are all these are working under the North America. It is LE101, LE102, LE103. So it's all roll-up will go to North America. Then the South and North America will go up to USA itself. So it actually helps us in like that. It is the hierarchy of parent-child relationship. So here the entity properties are like consolidation method, base currency, intercompany flag or jurisdiction. The next one we will come here is to movement. So movement is refers to the captures of why an account changes. It's like that we are taking it from that opening, additional, reversal, or from the foreign exchange rate and etc. Its basis is that to reconcile the balance to support the disclosure like the movement in DT and DTL, that how it is coming from the opening balance, from the closing balance or from the balance. Here we can actually say that the trial balance that we use is the movement is that we use is movement close. The flow is closed. When we use the balance sheet, it's actually balanced, and for P&L it's actually flow. So let me tell you in a simple way or the easy words, then when we close the trial balance, it's actually valuation go to P&L, but P&L's value still has to go in balance sheet. So the trial balance is closed right there. When the P&L balance is actually moved to balance sheet, so its movement is actually continuous, as there are expenses which is still to be adjusted. Then balance sheet has to be balanced in the balance should be in comparison, that it should be equal to assets and liability, both should be equal. So how it works is that movement types, that opening balance, current period, FX impact, FX is again that the foreign exchange impact, closing balance. So this here this closing balance is derived from that opening plus all the movement that we have done till now. For example, the detail increase due to the depreciation different, that you can say that the current period difference, that is the current period deferred also, you can say that. Then we have our multi-cap. Multi-GAAP supports reporting in different accounting standards that are local GAAP, IFRS, US GAAP, and Indian GAAP, Indian standards. So here it actually helps us to cope up with the different gaps. We have to actually not go through all of it and do it one by one. It provides us with all the gaps that you want to choose. Here's the total IFRS. Here's the local gap or the no gap, that according to it. Okay, nothing is in there. So its purpose is to allow the tax teams to reconcile the book versus tax starting from the from a different gap. For example, we are shifting our we are consolidating our sheet from in terms of that the business that is running in US, we are taking its data and merging it in the Indian companies, and according to the Indian gap, we are actually registering it with the tax authority. So the multi-gap help us to do all that hectic work from going through the different gaps. Here the gaps we are referring to is the generally accepted accounting principles. So adjustment are posted into correct gap bucket. Bucket here refers to that the column or even the reports or sheets. So example is like the lease adjustment or the depreciation adjustment in the IFRS, but not in local GAAP. Then we have our next one, that is jurisdiction. Here the jurisdiction represents the principal place of business or the tax authority of the entities. For example, that the business is operating in USA. So the USA is the actually jurisdiction under which they have different regional jurisdiction. For like Osaka. Oh, actually I'm wrong there, I think so. Oh, it's Ohio. Sorry, my bad. It's Ohio, California, Alaska, Alabama, Illinois, Nevada, etc. So, under the jurisdiction, it applies the tax rate, rules, and loss expires, and credits to different actually accounts that we are automating or adjusting itself. It allows us to report by jurisdiction, that is CBCR or ETR by company. Here the members, we can take example that the members like the US federal, then India, UK, Germany, and here you can say that the Canada region, and etc. We can take example that there is an Indian entity tax provision reported under the jurisdiction of India itself. If there is a company that is operating in USA but has to report in India because the main headquarters is in India, then it has to be according to the Indian jurisdiction, not according to the US jurisdiction. So under this, here you can see that instead of the full name they have used that US, then AL, that is the Alabama, then AK, that is Alaska. So it is the standard ISO code that we use. We can't use the full actually name for it. It avoid and we have to actually avoid mixing the functional and geographic locations. That means if Alaska is here, then you have put it right here also in a different things. That will actually create errors and crash in the application itself, which the application will tell you through errors. Then we have scenarios. Scenario represents different data like actual, you can say that forecast. Here it is, the interim forecast, then the budget, plan, and provision. So here's actual means it's the current one that we are working on. Plan means in further, and forecast means that if we are forecasting it for like a month, a year, half yearly, quarterly, it's how you actually want to work it on. So let's actually there is nothing under the plan. Okay, so under the scenario, its main purpose is to separate its historical versus the projection. Means what, you can say also uh, that for example we can take shares. It also contains that what the shares was actually purchased from, and that is the historical, and projection is that what is it currently now. You can say that to allow variance analysis too. It can be a time in the scenario, it can have its own time span that I've already told you, like a 12 month, 4 quarters, monthly or yearly itself. It has its own data entry rules and security settings. For example, actual is for reporting the last quarter results, and forecast is for projecting the next quarter tax. If we are talking as we are talking about the tax TRCS itself. So then next we have our year right here. Years. So here year represent the fiscal or the calendar year. That is like current is 2025, the old one was 2024, upcoming is 2026, and different actually fiscal years. For example, that what you have taken, as I have to work on 2016, so I have taken a prior year, that is 2015. So our actually the calendar is starting from 2015, and we have made it for 2024. That is the last year. So here we have 2024. If we want, we can actually add more years uh, from edit itself if you need it to. So it's actually the anchor time dimension, you can say. It helps us in tracking the long-term items like loss, carry forward, credits, amortization, and etc. The working of is easy, that when you create the application itself, you actually define the start and the end year. Then the work with the period plus the view, that what is the view and what is the period. Under this we can take example that we can say that the carry forward of NOL, that is net operating losses, tracked by year of origin until expiry. For example, there was a NOL in 2023 and it's going to expire in 2025. So it's help us in actually defining its birth year and its expiring year, and even to when to use. So it creates a wide enough range for at least 10 to 15 years, so that it will be easy for you to work on. So you can actually have easily like what we can say scenarios, like planning, forecasting, and actual too. Next we can come in under that view. So here view controls the time aggregation of the data. That means periodic, quarter to date, that is, and year to date. To see the date as monthly or quarterly or cumulative totals, we can say right here, to make the interim provision calculation easy with view. So it how it works is that the flow accounts, that are we call the expenses aggregated over the time, or the balance account, that is their assets or liabilities, showing the end of the period amount, and etc. So we can take example that in March 25 the tax expenses were periodic, that March only. In quarter 1 2025 the tax expenses were from January to March. Then Y to do is that the full year one. So it is according to that. Here you can see that YTD we don't have under it, anything under it. And we can view the security from right here itself. I'm gonna actually tell that what is all this dashboard from under from this action till this is the search down, or you can say drill down, so that you can view that what is under it and what is under a specific parent, and then the children, does it have a sibling or not, and other things, to refresh the data, move it up or down. So we are gonna do it also in further. So in short, when you actually enter a number in TRCS, just actually I'm summarizing the dimensions that we have actually studied. that these all dimensions that we have studied, we have done actually account, period, consolidation, data source, currency, intercompany, entity, movement, multi-gap, jurisdiction, scenario, years, and view. These are the 13 predefined dimension, and the most important ones are here. Here are account, period, consolidation, then the data source, currency, entity, movement, multi-gap, jurisdiction, scenario. So if what we have actually discussed and learned accordingly, I can say that in short, when you enter a number in TRCS, you are not just saying that it is a tax expense of 100 rupees. That we have the example that we have taken in the starting of this of our while starting the working of the dimension. It is that we are saying that the tax expense is 100, the entity is India, the period is March, that is P3, the year FY year is 2025, scenario is the actual, jurisdiction is India, currency is INR, data source is automation. The easy way to show you is the smart view. We are gonna come under the come in the smart view as we will start to load our data, metadata that we are talking about. So only when then these things are done, the TRCS know exactly where to store it and how to actually report it. So now that we have studied that what is dimensions, we can study that what is this simplified dimension editor. So as we have all studied about all the dimension right here, let me tell you that under, let's go to account first. So here is the dimensions. For example, under the balance sheet, you go to balance sheet and then you drill down 10,000, then you drill down 10,100. Here we have 11,000, 12,000. We need a sibling of 11,000. Then we go right here, add a sibling. Then it adds a sibling to the account 11,000. You can name it 11,001. Description, what is it? If you can write the description that what is it, I am gonna take that crypto. Now what is it? Here it is asking that what is its account type. Is it an asset? Is it liability? Is it a revenue? Is it a expense? Is it a equity? So here we will take asset. Then we have variance reporting. Variance reporting is it an expense or is it a non-expense? So it is not an expense, so we are going to take non-expense. Then we have the time balance. The time balance that we have already studied, that will be flow. Then the exchange rate type. No rate means we don't need any rate. Ending means that what is recorded in the ending itself. Historical, here all three of the historical here are for FCCS. For example, you have taken the share at 2016, so at the in historical you can apply that at this time this was the actually rate. So that is what we are actually, that is what the historical means here. Under historical we have three different variations, so we are going to study that too. Then the next thing is that where you have to actually, what will be the source under the cube, so that will be console. Then we have data storage. Under data storage we have store, that means only you can store the data here. Then we have dynamic cal, that means all the data means, for example, there is can take an Excel example. For example, there is 1, 2, 3, 4 and 5. So and here is 10. So under this 10, all the data, that all the value under these 1, 2, 3, 4 will roll over to 10. For example, it has 1 under it, 1 under it, 1 under it, 1 under it. We can take a 0 here. So what was the actually total amount? That is 4. So all the data will be roll over to this parent. So here that means that it is we use dynamic cal to roll over all the amount of children or the sibling under it. Then never share means we are storing the data but not sharing with anyone. Then it's vice versa, not shared is shared, means you are actually recording the data and storing the data, and you are sharing with another entity on another account. Then we here have attribute values, UDA and member formulas. We are going to study attribute values in UDA further as according to the need itself. So member formula is that if there is a need of formula, that we have to calculate the valuation under it. So we will save it. See, you can see right here that it is 11,001. It is crypto. It has the actually data storage is dynamic cal, and it is the sibling to 11,000 and 12,000 and children of 10,100. There is another, if you need to find this thing right here, if you don't want to drill down so in depth, you can just go here. You can search either by the alias or the name. So if we put 11,001 and you search down, you can directly come to 11,001, and we will just switch it. If we go to alias and then we will drill it down, you can see the search is incomplete, no result was found. So what we actually named it crypto, CRYPTO, crypto. Then we will drill it down. Here you can see with the alias name it has actually searches for. Then under the search option we have both, means with both the with the help of both the actually account name and the alias we can find it. So here is 001. We will just close it up and then we will drill it down. Then here we have filter by cube also, which is actually not essential right now, so but I will also explain it. See that according to which cube you need the data from the console, rate, CBCR or the config. Then if we choose one of these things, for example it is okay, rather than taking the balance sheet we will take the exchange rate itself. Here you can add a sibling to it, but you actually can't add a child to it. Means exchange rate itself can have a actually sibling but can't have a child. Here you can see that you can these things. So this is for moving it up. So FCCS system account actually went down when we actually click the move up button. If we click the move down button, it will move it under system account. Then we can edit it if we need. See exchange rate. Then what will the alias? It will be default or any other thing. There are attribute values UDA, same as creating a new sibling or new child. Then we do have here is show the ancestors. What we are going to do here is go under the balance sheet under 10,002 and we are going to select 1500 to 15,270. Then we are going to say click on show ancestor. See 15,270 is a child of 15,200 and its ancestor is 10,200, and the final ancestor what we go is that it's account. Then account has a child of FCCS balance sheet, FCCS is a child of 10,000, 10,000 is a child of, has a child 10,200, and so further. Now if you have added something, then you need to refresh the database if it is not showing, and you have to also have to actually refresh it each time you have edited or made a actually change in something. So it might take a little bit of time, so let's wait. Here are the custom attributes that I was talking about, that you can add the custom attributes from right here. Under the dimensions, here you can also actually change the dimensions settings also. See, as for we have to select the any entity under the account, then we actually have to click on this edit itself, then it opens us the tab. For accounts itself, you actually need to choose a dimension right here. Under account, you can take configurations, then you can click on this pencil icon. See, dimension configuration, you can add a description, alias, and valid for cubes, which cube you want it to be. You can reset it also, that whatever the changes before saving it, you can reset it to that specific point. So if this is all about the dimension that we have talked about. Now here actually we have covered till now that what is dimension, different types of predefined dimensions, and and the dimension editor. Now we are going to simplified dimension editor. You would be actually know that I have actually duplicated the website itself and have told you a second way to go to the dimension itself, that is through application in overview. Then here you can see under all the cubes, you can select that under which cube you need. So if you take console, only the cubes under the console will show. If you take all the cubes will show. Then we have dimension type, space, metric, replacement. So we will take account. Here's the account. See, you can see it right here. If we can close it, then reopen. So here is the FCCS system account. Here is the exchange rate that we have seen, the income statement, and the balance sheet right here. We will bring down the balance sheet. We have seen that the 10,000 was the total asset right here. We can compare it. This is as same as that version itself. That is this you can say is in a more tabular way, so that it is easy to understand. It is in that pictorial form that you can say that in a free space. So we have the balance sheet right here. We have 10,000 and 35,000, and under 10,000 we have 10,100, and under 10,100 we have 10,100. Its alias type is you can see that current asset, dynamic cal. Under this you can go that its type is alias type is current asset. Here it is asset. You can have here the what is the account type, it is asset, liability. Then we have tax automation, so if we have automated something, what is the tax type, like current tax doesn't have current asset doesn't have any tax type, so none. Then we have consolidated ETR, rate change to equity, tar book account, national. See, under this we have actually CBCR net tangible asset, property and plants. So here you can see it has the same options as it has under the dimension that we have actually gone from the navigation to creation and managing the application, and under the dimension I will again show you from where you can access. Here's the navigation, then create and manage. Under it we have the dimension. Then you can actually change its party parent member from here right itself by double clicking it. See, here you can see we have to save it after each actually usage. Here you can see that we have option of zoom in all levels. We will choose this and we will say that zoom in all levels. working right now. Refresh. Let me refresh the data, then we can try it again. Here we go. If it isn't working, you can you actually reload the website itself, the application itself, or you can actually refresh the data, then it will show. This means after clicking on zoom in all levels, under all the levels, the parent, child and sibling under that 35,000 will actually will be shown at once. Then you can say that zoom in at the bottom level. See, then here we have that key, what we need to be key selected and remove the selected. We need to select this one, so keep selected. The only thing that has that we selected will show here. Then we can say that okay, we can go back from here and then we are gonna go again. This is the there, you can reload the data through here itself. Okay, so you can see that is there anything under it. See, yes, so you have under that 11,000. If you actually keep selected, you select the keep selected. You can remove the selected ones. See, remove the selected. Whatever you can select, it will remove it. Then from here you can add a child or sibling, as we have already discussed, and you can even duplicate it. For example, duplicate. See, 11102 copy. But you this can't be same, that USBNK. Either you have to rename it like USBNK treasury account 1 or 2. The alias can't be same. And zoom out. We'll refresh the data once more, then we will say that zoom out. See, we have actually this zoom out, and if you can select this one, then you can click on zoom in, then it had zoom in. This is same interface as this one. Its working is same, but it's actually in a pictorial way it's a bit different. So I hope that you understand this all the dimension right here, and all the actually and the toolboxes, that all the tool icons that we have here, that move down, move up. We can also move, as we were talking about moving up, moving, we can move the exchange it up and down from right here also. So as this is all for today right now, and the loading of metadata, and there are different ways from which we can actually we are going to load it. We will start it from tomorrow, the same timing, and anything if there is any other questions, you can actually ask me at that time. Thank you for listening and understanding with me today in this session. Thank you very much. क्या हेडफोन से भाई मेरे कान की लगा देते हैं ये।